it is it is a funny heat at the moment. So during the mornings, it's quite cool, but then during the day, it gets very, very warm and you think it's summer already. And then in the afternoon, it's a little quiet again.
Cool again. Well, hello everybody. That is Marc Orchard giving us an update of the temperature in Brisbane. Thank you so very much for joining us on our HubLive. Of course, it's just after 1 on Thursday. As we always do, we would like to share with you important information that will help you succeed in business. So Mr. Marc Orchard is my guest today. Marc, you say that you are passionate about helping world-class entrepreneurs create the exceptional companies of tomorrow. Now, that's exactly what we're passionate about here at the Smart Hub. So we're extremely excited to have you as our guest. I know, right? Yay! And very, very happy that you've agreed to talk to us. So tell us a little bit about BDO in Brisbane and about your own background.
Yep, got you. So thank you very much for having me as part of the session today. It's a pleasure to be here. So I am as atypical of an employee of an accounting firm as you're probably going to find. So I'm 6'5" and I run around Queensland in my high tops, and I'm definitely not an accountant, which is great because it means that I can make fun of how many Excel spreadsheets they all have. But my background originally was in financial planning. So when I came out of university, my dad was a financial planner. And so I initially worked at Macquarie Bank and then went to AMP and went and started my own financial planning firm, which I had for several years. It made every single small business mistake that there was to make, at least. So pretty much everything that I have ever given as advice to founders since then has certainly been learned the hard way. But we sold my financial planning firm back in 2015. After it gave me a lot of grey hair, which I think you can see here at the moment. And I had a situation where I had signed a non-compete, so I wasn't allowed to be a financial planner for a period of time. And I was really interested I had a couple of my clients who were investors in tech startups, and I thought that they were really interesting because of the velocity of growth and in particular, the exponential nature of how startups work. So I ended up at Fishburners as the Brisbane City manager there when they came to Brisbane in 2017-18, and then I moved to BDO, and I guess BDO's interest. So BDO, for those who aren't aware, is a large accounting firm similar to Deloitte or KPMG or EY or Co. And their interest in startups is very specific. So I guess we are looking for early stage high growth companies who are interested in I guess global opportunities, and for us we see them as potentially be some of our most lucrative and best clients of the future. But one of my frustrations when I was at Fishburners was that the startups had really simple and really complex financial needs at the same time, and the big four would come to Fishburners and do a workshop, but then when a startup would follow up for advice, it would be a quote for $20,000 to $100,000, and the startup's like, great, do I sell my firstborn child or my kidney to be able to afford this? But at the same time, a typical suburban accountant just didn't have the expertise to be able to help a company that was looking at investment or looking at shareholders agreements for multiple founders or looking at international expansion. And so fortunately here at BDO, I've been given a platform here where I have a global network of accounting firms around the world who have the capacity to be helpful. But my background, very specific to startups, means that for most early stage founders, I kind of act like the API between the accounting team and them, where I translate the numbers that the accounting team is giving them and give them some context and some understanding, and vice versa. I can help the startup to explain to the accountants and our different tax teams here at BDO how they can be most helpful in regards to plans for future growth. That's kind of the nutshell, please.
Oh, okay, awesome. Hey, Janice, thank you so much for joining us today. I'm very excited to be online with the none other Marc Orchard, and we're talking all things tech startups and growth companies. Now, I'm somehow in my mind, Marc, I thought that you were connected to Advanced Queensland. Did I get that wrong?
No, so I have had a good relationship with Advanced Queensland pretty much since my time at Fishburners. And when they very first started the Chief Entrepreneurs Office, it was a program that I wasn't so much involved in officially, but was certainly supportive of because of what we were doing at Fishburners. But in recently, BDO has had a partnership with Advanced Queensland, the Chief Entrepreneurs Office here in Queensland. When the pandemic hit, we were concerned, I guess, more broadly, that that would mean that a lot of startups would be in a situation where they were financially vulnerable. And so the Chief Entrepreneurs Office, I was wanting to make sure that startups had the support that they needed to survive through the early parts of the pandemic, and then moving forward, I guess, getting some certainty about what would happen in a world that we hadn't really ventured into before. And I know Advanced Queensland, because they had put so much financial contribution into the innovation ecosystem, they were really keen to be able to make sure that that money, that those businesses that have been supported with those grants and so forth were able to continue going into 2021. And so we did a partnership with them where we did a number of virtual workshops and a basic accelerator program for a number of startups around Queensland. And the idea being that Advanced Queensland was sponsoring startups to go through those programs, and we did a number of financial literacy programs to support them. So no, definitely tied to Advanced Queensland in a number of ways, but big supporter of them as well.
Oh, wonderful, wonderful. Hey, Drew, thank you so much for joining our Hub Live today. Okay, so Mark, this is exactly the topic that we're discussing, how to plan for an uncertain future. And this is something that you've literally been doing for this entire 2020 year, right?
Yeah.
So could you please share with us some of the most important tips, tricks, mindset, tool set, skill set around how do we plan for an uncertain future? And maybe if you could make the distinction between what a tech startup or just a startup is, and what you would do if you're going to also have tips that translate if you're an SME, that you know the tips could also work for them.
Yep, got you. So, well, I guess when we very first started with the pandemic, and I guess that the pandemic was a wonderful example of going into a time of uncertainty very quickly. Like I feel like most of us within a week went from laughing at the news reports about the people who were buying all the toilet paper to being in lockdown. And I feel like it was quite a significant shift in market conditions very quickly. But the things that we used to, I guess we were sitting down and talking to our clients about was initially, were they under threat? Like, was there a situation where their market had completely changed? Was there an issue with fundraising or something like that, that they were halfway through a process of that this was going to change? What did it mean for them, and what did success look like for them for the rest of the year? And for some of the startups, it was survival, or for some of the SMEs, it was very much around just getting back to core business to make sure that they were viable, and looking at some of the government programs to make sure that they were supported if they had had a significant reduction in cash flow for a period of time. But second of all is, and we were found that about 80% of the small businesses and startups that we were working with had been negatively impacted by COVID, but 20% of them had actually had a rocket ship built underneath them, like, overnight. And so they were a meal delivery company that went from having 200 orders per day to having 4,000 orders per day, or something along those lines. And so everyone was stressed, but for very different reasons. And like when we think of uncertainty, like oftentimes we think of that being a risk, like that we're worried that we're going to lose something, or that ultimately our cash position or our business model might not quite stack up. But for a lot of the businesses, the most stressful thing was that this was the once in a lifetime opportunity that they would love to take advantage of. And they were getting great traction, but they didn't have the internal systems or processes to be able to manage that at scale. And so our process here at BDO was very much around, I guess, survive, understand, and thrive. So surviving is so much like having a quick toolkit to be able to go through what were the key, what would success look like? Were there any exponential threats or anything that was going to stop them from being able to get to the end of the year? And more broadly, was there anything specific to that business that they were stressed about? And then from an understanding point of view, the capacity to take a step back and reflect on what was happening in market. And for anybody that was in a digital situation or had an increase of demand, being able to work out how do you position yourself to make the most of that. And for those who had a decrease of demand or had issues, I guess, with the new normal, being able to work out whether they wanted to pivot their business and take what they were doing and change in some way, shape, or form. And the three pivots we saw a lot was either what we would call a market pivot, which was taking what they were already selling and selling it to a new market, because that was now much more viable. The second is what we would call an asset pivot. So taking what a market that they were already selling to and selling something else to them because that was more important than the short term, or then more broadly, like I guess like a business model pivot where it was like a completely different like use of the different assets that they had in the team to try and build a completely different business. So for example, we had a winery in South Australia who most of their revenue had come from doing special events like weddings and 21sts and 40th birthdays, and they were unable to open their doors for 3 months, and so they pivoted and turned their winery into a subscription model e-commerce store where you could actually buy the different wines and have like different wines from that winery be delivered every month. And so they went from having no e-commerce presence to having like a $250,000 worth of e-commerce sales within 3 months. And so we found that a lot of people, just by stepping back and understanding what their opportunity was, that was really important. And then lastly, for those who I guess in that thrive stage, it was really just a case of them being able to consolidate whatever position they'd chosen. For some of our startups, they had decided that there was no longer a viable business, and so we helped them to land their business safely so that they weren't at personal or financial vulnerability. But for those who are now still doing exceptionally well, it's a case of, okay, well, what does the new normal look like for you? One of the things I found that for all the founders, whether they were small businesses or whether they were startups, is that the moment of clarity came when they were able to give themselves some space to accurately be able to make sure that they had survived the initial part of the pandemic or the uncertain situation, but being able to actually have some really good advice, whether that was from a mentor or from some peers or from an innovation hub like what you're running there with a team there at least, or whether it was like their accountant or their advisor, like the external capacity to be able to think through and brainstorm what this new situation looked like. We found that most startups actually survived through the pandemic much more than we expected. If anything, it was actually the startup ecosystem that consolidated a little bit. There's less co-working spaces and accelerator programs now than there was 12 months ago, but the actual startups themselves did really well. And so I guess that survive, understand, and thrive model that we were using here really worked well. And we really focused on cash flow in particular. So I'm mindful that for small businesses, and startups, like cash flow is slightly different. But for most of the startups and small businesses, the big thing they just wanted to know was how much money did they have? Will they have that money in the future? And did they have to do anything like let go of employees or look at trying to get JobKeeper or anything like that? And once we walked through that scenario and they had some certainty with a cash flow plan, everything else was pretty easy to work out from there.
Awesome. Hey, Tracy. Hey, Narelle. Thank you for joining us. We're talking to Marc Orchard from BDO and really looking at what to do when you are planning for an uncertain future. Now, Marc, in the beginning of your answer to that previous question, you actually mentioned a few statements that could be turned into questions like, what is your current situation? Has your market changed, et cetera, et cetera. And so I'm just imagining for people who are watching us today and they're like, yep, I need to plan for an uncertain future. Would you say that a good thing to do would be to ask yourself those questions and maybe even journal out the answers? I think journaling is such a fantastic tool to actually get thoughts on paper, and then that helps you create a baseline to move forward. How would you suggest people, do that for themselves if they're not in one of your programs?
Great question. I guess the big thing, and one of the things that I found for a lot of startup founders, is that when you're or early stage companies, whether they be startups or SMEs, it's really easy to go into like, we need to fix this or we need to do something mode. It's a lot harder to sit back for a moment and reflect on what does success look like for you at the start of the process. And what I mean by that is that we had a couple of companies who were struggling to get traction, and the pandemic gave them an opportunity as to whether they wanted to continue with their business or whether or not they wanted to pivot or to wrap the business up and exit it, with the idea of them being able to choose what they wanted to do next. And we had a couple who just wanted to go into like, let's fix the situation mode. And I think that when they had the chance to sit back and think about what they actually wanted from their business moving forward, the ones that had the best insights were the ones that gave themselves the space to be able to do exactly what you just said, which is to be able to take a few important poignant questions like, who am I responsible to? Do I have any outstandings that I need to meet, whether that be financial through the bank or through a lender or so forth, or through to staff, or personally, like, are there any promises that I need to keep to clients or to contracts that I've signed off on. But once we got through that survival stage and we started thinking about, well, what do I want from my business moving forward? I found that a lot of startup founders found an increased resolve for wanting to do their business. The pandemic hadn't changed that; it just made it a little bit more difficult in the short term. And for those businesses, once they realized that their intrinsic reason for doing the business still remained, it made it much easier to be able to come up with a pathway because they knew it was worth it for them. And for most of them, they're doing really well now. For others, it was a really great chance to reflect on the fact that, and I guess the best question that I've ever heard when it comes to reflecting on whether or not to continue in the business that you're in is that if you knew what you know now when you started the business, would you have started the business? And like for the founders that say yes, I totally would have, regardless of the pain or the challenges in the short term, then typically those founders were able to find a way through. And for the founders who were like, you know what, knowing now what I know, I probably wouldn't have started the business, or at the very least wouldn't have started it the way I did, because there was a chief challenge, or there's an issue, or there's a fundamental challenge that I can't get through at the moment. For those founders, it was easier for them to be able to use the pandemic to be able to pull back on their business and to change direction, or to exit the business completely. And so I do think it does help if you have a third party to reflect with, whether that is a peer or a mentor or a trusted advisor or so forth, because those people can really hold you accountable. But in the short term, in lieu of that, a journal, some really good questions, and the capacity to be able to determine what success looks like for you and what next steps might look like was definitely helpful to our companies here.
Okay, perfect. Hey, Brendan, thank you so much for joining us today. Okay, so to summarize what to do and how to do it is, number one, take a step back. And I think what you mentioned is extremely important, because you can get caught up in the day-to-day. You can get caught up in the challenges and the problems and the email and the urgent as opposed to the important, right? So take a day, schedule a day for yourself where you can only like zoom out and think about where you are, where you want to go, and how you can get there. And a really easy way to do that is to ask those questions like Marc just mentioned. I really love the one, just to like as a starting question. If you knew what, if you knew, you say the question now, I'm all mumbled.
That's okay. If you knew what you knew now when you started the business, would you have started the business at then? And that's a really good question to start with.
Absolutely. Okay, so that's question one. If yes, then ask a number of other questions. If no, then you kind of going down the road of, right, how can I wrap this up, or how do I make this better, right? And then you ask a series of other questions, the ones that you've just mentioned, you journal. And the second thing is really, really good to get a sounding board, a mentor. I know I'm going to share your contact details of people are interested in connecting with you, or if you want to come to the Smart Up, we can certainly help you here as well. And there are a number of other people around the region that can help. But number one, take the time. Number two, answer the questions. Number three, reach out to someone then to help you clarify that further and reflect. I love the word reflect. Okay, so what now that we've done the planning and we kind of know what success looks like, and we know we have a brainstorming list of possible steps that we can take to achieve that level of success, what do you suggest people do next?
Yeah, got you. So obviously this is very contextual, because for every business, like the call to arms or the action steps are probably quite different. But some of the founders that I saw do this really well. So there's a couple of things that they did consistently. One is that they over communicated to all their stakeholders to make sure that everybody was on the same journey. So for example, if you have any investors or directors of your company, obviously you'll have a management team and potentially some employees, but you've also got your customers and your clients, or the people who are following your journey, making sure that you keep them up to date with the version of the story that you feel like is most appropriate to share with them is really important, because if you're going to ask them for support, so if you're going to ask your employees to come with you in a different business model, or if you're going to ask your investors to potentially put in a little bit more money, or your directors to okay a different business decision because as the CEO of the company, you've found a new way to go forward, it's a lot easier to do that if you've been keeping them up to date as you go. And so one of the things that I would definitely suggest to anybody who is looking to go into a period of uncertainty, whether it's a pandemic or whether it's a crisis of its own situation, or simply just an opportunity that you see that changes, I guess, the economic landscape for your business specifically. One is over communicate to the people involved to make sure that they're all on board and that they see the vision and they're going to back you. The second is being very clear about what success looks like. because one of the things we found is that the startups or the small businesses who tried to do too much coming out of the uncertain period, particularly if they weren't sure what the right answer was, oftentimes felt very overwhelmed or caused their team to be quite confused as to what success would look like. So really setting clear understanding of what success looked like. And even here at BDO, like when we went into the early stage of the pandemic, the partners of the firm were very clear, saying, oh, these are the goals that we want to try and hit. We want to try and get through the pandemic without letting anybody go or having a situation where we have to reduce our team sizes. So this is how we're going to achieve that. We want everyone to buy in. It meant that we all felt like we were contributing, and it wasn't just the founder or the CEO that was burdened with the outcome. It was that we were all in this together. But then lastly is one of the things that I think is breaking down those bigger goals, like how you're going to get through a pandemic or how you're going to get through a crisis situation, into actionable things that you can celebrate on a day-to-day basis to keep the team morale up. Because ultimately, if it's just you, or if it's you and a business partner, or if you have a couple of employees, it's really hard when the macro environment is quite aggressively negative, particularly through media and so forth, to be able to keep the spirits up with the team. And so the teams that I saw do best were the ones that really celebrated the daily wins. If they hit a mini target, or they were able to close an account, or they were able to pivot a business and they got their first dollars coming through that e-commerce store, for example, with the winery, those teams did best coming out of the second half of the pandemic, when things started to open up again and people were looking at trying to expand their businesses. They were already prepared to do so. So just reflecting on that, over communicating, like setting really clear and specific goals that people are bought into, and then being able to celebrate as you go through as a business owner really does accelerate the chances of success coming out of a crisis moment.
Okay, excellent. Right. So how important do you think is planning in this whole process?
Okay, so planning is a funny one, and I think that you are all friends with my friend Peter Lorre, and I think Peter Lorre is like the Gandalf to the startup ecosystem in Queensland, but he has really good saying where he's like, a business plan doesn't mean much, but not planning your business will always lead to you failing. In regards to planning, it is really important to be able to make sure that you're prioritizing the tasks that are going to give you the highest value. And I found that the startups that were actually much more capable, they had someone in their team who was naturally a project manager or naturally inclined to be organized that way, were much more consistent and did a lot more in a lot less time than those who struggled to be able to have a strategic plan in place. Now, the plan doesn't have to be an 80-page document saying these are all the things we're going to do coming out of a crisis or uncertain situation, but it does need to be really clear in regards to what are the activity you're going to prioritize, and obviously what does success look like, because ultimately it's really hard to track a team who is actioning things if there is nothing to compare it to. And so I would always say, like with the startups that we have here at BDO, we typically don't set up business plans, but we set up a system that they can use an ongoing, in their business for once a week, where they have time with their team to be able to listen to any strategic thoughts, the capacity to then reflect on how they would implement that, and then turn that into part of however you manage your workflow. So that whether you're an agile team, or you use Scrum, or you have some sort of system like Asana or so forth, being very clear in regards to how you hit those potential success targets, and typically having someone in your team that takes responsibility for the plan is really, really important if you're trying to not just be successful, but you're trying to bring back some certainty to your team. That plan can give them a lot of comfort.
Nice. Okay. So share with us some cash flow strategies. So you did say this, cash is a large part of your focus.
Yep.
Tell us more about that.
Got you. So as part of the Advanced Queensland program, we actually took a number of early stage high growth companies, both small businesses and startups, through a cash flow planning process. And one of the things that we found is that, if I'm honest, the financial literacy of founders is a lot lower than you would expect. And so for a lot of founders, they actually manage their cash flow through their bank accounts. They'll log into their net bank or their Westpac account or so forth and say, how much cash do I have in my bank today? Great. Is it enough to pay my bills? Wonderful. That's cash flow done. And that's a really bad way to manage your cash flow, because ultimately not all the money in your bank account is your money, particularly if you've got employees and you're keeping tax and super and co. But also if you're selling services or products, and ultimately part of that money is the ATO's money that you're collecting on their behalf. Ultimately, it can be quite confusing as to, like, if a big change moment happens, how much of the money that you have available to you in your cash account is actually usable as your business needs to pivot or change direction. And so what we have is a weekly cash flow forecast, where what we start with is your bank account. What's your bank account at today? And then we have what are all your automated incoming income. So if you are on a subscription basis, or if your product or service is very specific to an ongoing payment, what money is coming in regularly that you can depend on. And then secondarily, what is ad hoc income that's coming in? So if you're doing contracting or invoicing, and that you know that there's invoices outstanding or so forth, like when do you expect them to come in? And then is there any way to probably bring that in a little earlier? Then we do the same with expenses. So what's automated and coming out, we know when to expect, and what are things that are invoiced to us that we could possibly move out on payment terms if it means that it gives us a little bit more understanding about cash flow. But if you bring all that together, it gives us a pretty good understanding as to whether or not we're going to have a cash crisis sometime in the next 3 months. And so we typically plan over 90 days. And our goal is that if we are going to have a cash issue, we want to know somewhere between 3 to 6 weeks before that happens, so we have the chance of being able to do something about it. So if you're in a service-based business or a product business, if you know in 3 to 6 weeks that you're going to have a cash issue, that you can then look to try and increase sales or at least decrease expenses for a period of time to be able to get you through that period, that's really important. Also, one of the things we found during COVID in particular was that a lot of our suppliers were willing to negotiate with us if we gave them the time to be able to be proactive about it. And so what I mean by that is that calling your supplier or like your bank, for example, with your mortgage, or your landlord with the rent when it was due 3 weeks ago, and calling them and saying, sorry, I can't pay you, really hard to negotiate from that point. But if you call, like we had some clients who called up their landlord at the start of COVID and said, look, we are anticipating the next 3 months is going to be a challenge for us, but we don't want to put you in a situation where it's difficult for you as well. Is there some payment terms or some situations that we can organize with you that could decrease the financial pressure on us, but allows you to come on that journey with us? And they ended up getting 3 month like rent holiday from the landlord to make sure that they got through okay, because the landlord didn't want to lose them as a tenant. And so from my point of view, like we did a lot of negotiation like that with our different suppliers for the companies that saw a cash crisis coming. And then lastly, we made sure that the startups were doing it once a week. One of the things we find is that oftentimes with your financials, it's in Xero or it's in your accounting software. It's not something you touch very often. And oftentimes you go to your account at the end of the financial year and you're like, hey, here's all my stuff. Can you tell me how much money I made and whether I have any tax to pay? We were trying really hard to make sure for our startups that were going through the program, that particularly at least from a cash flow point of view, that every week they knew how much was coming in, how much was coming out, and that if they had any issues coming up in the next 90 days, that they could plan adequately for them. And that's worked really well for the startups that went through that program.
Oh, that's really excellent. So do you recommend that people, like founders or managers, CEOs, schedule time in their diary once a week to look at the financials?
Yep.
That's it. It reminds me of a dashboard. Yeah, the dashboard concept.
Yep, every week. Like we prefer if the founder or the CEO does it on a Monday morning as like one of the first, second, or third things that they do for the week, to be able to see what's come in for the last week, what's coming out for this week, if there's any decisions that they need to make while they're fresh at the start of the week. But you can choose any day of the week to be able to sit down and review your financials, and particularly your cash, to make sure that you are on top of what's coming in out of your business. But for us, like, it's non-negotiable. For all our startups, we really do encourage them that they do that at least once a week, preferably on a Monday. And if they have a management team, doing it with their management team so that everybody understands what the position of the business is.
Nice. Hey, Melissa, welcome to today's Hub Live. I'm here with Mark. Please, if you have any questions, please feel free to put them in the comments and we'll get Mark to answer those questions for you. So you mentioned that Monday mornings is the perfect time to go through your cash flow. What other weekly / monthly activities should we incorporate into our schedules?
Yep, got you. So once again, this is very dependent on your context for your business, and so for some businesses, like and so for example, we have a startup which is an app that is doing hundreds of thousands of transactions per day. For them, they have to look at the financials every day. But for most businesses, a weekly, fortnightly, and monthly routine is perfectly appropriate. So for every week, we suggest that our startups or our small businesses look at their cash flow to make sure that they know what's coming in, what's going out, and if there's any problems that they need to prepare for, that they have the chance to do that proactively. The second thing we often get our startups to do is to look at their P&L at least fortnightly, and typically with their profit and loss, if they do have a budget that they've put together for the year, compare their budget profit and loss through to their actual profit and loss, so that if they have any KPIs or if they have any traction metrics that they're measuring their team to, that they're able to hold everybody accountable to that. And oftentimes that can also be if you have a head of sales, or you have a salesperson, or somebody who's helping you with the revenue side of the business. That can be a really great way to keep both you and them accountable. But probably the most important document that not many startups ever look at is their balance sheet. And the balance sheet's really important because the balance sheet is a little bit like a scorecard, going back to what you mentioned before in regards to how much assets do we have in the company, including the cash in our business, but also our inventory and any other, I guess, assets like accounts receivables and so forth that we could potentially make money off. And then all our liabilities, which are things like any loans that we have, any things that we have outstanding that we have obligations to pay, and then at the end of it has the equity that you have in the company, or the valuation of your company holistically. And the reason why it's important is that your P&L in particular, your profit and loss, should reflect, if your balance sheet is right, your P&L will be correct. And that's why it's called a balance sheet, is that if it all balances together, then it gives you all the information that you need to make good decisions from. Now, to be fair, if I'm honest, most accountants don't really talk to their startups or their small business clients about how to do this effectively. And that's something that I'm really passionate about. And so if anyone on this call does want to have a quick conversation in regards to what that might look like I'm happy to quickly touch base with the hub, or with the startup specifically, just to make sure that you have that conversation. But typically what we say is once a month, the founder should be looking at their balance sheet to make sure that everything is corresponding correctly. That once a fortnight, you should be going through your P&L with the budget to make sure that you're on track with the numbers that you're expecting for the month. You shouldn't have any surprises, that you're not hitting KPIs if you're doing it at least once a fortnight. And then weekly, you should be looking at the cash flow just to make sure that there's any cash flow issues that are going to happen for the business, that you're prepared for them 6 to 12 weeks in advance.
Fantastic. Okay, what else should we be thinking, doing, or not doing in these times? Because we feel like the uncertainty it's almost at its peak right now. No one knows what's going to happen when the government winds back their support. What do we have to do right now?
Yep, got you. So there's a number of ways that I could answer that question, whether it be academically, what you do in states of crisis and research that kind of backs that up, whether it's practically, just what are some of the best practices that I've seen. And then there's obviously the personal contextual type way of sitting with each different company themselves. There's probably some insight that they could give me that would give me understanding of their best steps. But I think that one of the things that it's really hard to do is to kill a business that's making too much money. And one of the things that, and I know that sounds really silly, but one of the things I find with small businesses that they tend to get themselves into a little bit of a trick with, is that the way that you go through getting payments done for your business and how you charge and your pricing model, your business model, your pricing strategy, and the timing of your payments oftentimes will actually have more of an impact to your cash position than almost any other decisions in your business. And so if I was in your shoes and I'm thinking about, okay, so I'm either entering into or I'm currently in a time of uncertainty, the things that I would be reflecting on is is there a way that I can bring the cash, that I'm getting paid into my company forward somehow? So if I have payment terms, for example, where I get paid after I deliver a service, can I turn that into a 50% deposit upfront and a 50% deposit on completion? Or if I'm working on a product company where I'm taking product in stock and I'm selling it, can I somehow negotiate better payment terms so that I'm getting my payments faster, but I have better payment terms with my suppliers so I don't have to pay them for a period of time? Like little things like that. Oftentimes with cash flow, it's all about timing. It's literally like, when do I have to pay my bills and when am I getting paid on my invoices? Then I guess like from a next step to that is literally then, I guess, long-term trying to figure out what it is that from a business point of view you're trying to achieve and what does success look like. And you'll notice that I've brought that up several times today. And the reason for that is that sometimes when you're in business as a founder, it's really easy to get lost as to why you started the business in the first place. And ultimately, like if you're starting a business, it's one of three reasons. It's really because you have an impact that you want to make in the world, or you're looking for a financial return to be able to give yourself and your family or the people you love, like, a lifestyle that you aspire to. Or lastly, there is an intrinsic motivator that it means that this particular work is your best work. And so in all three of those situations, ultimately being able to come up with a sustainable way to grow your business regardless of the situation is really important. And ultimately the three things that really help with that is having a really good pricing strategy, which means that your gross profit is really high and that your net profit can be flexible depending on whether or not you need to grow and scale or whether or not you need to pull it back and save for a rainy day. The second is making sure your business model is set up to be able to help you to be able to go through an uncertain circumstance and still be able to provide enough certainty for cash flow in the short term. But then lastly, probably the biggest thing is finding a good team of people to bring around you. And so if you didn't feel comfortable, confident calling your mentor or your professional service advisor or your accountants during COVID, or if they didn't give you a particularly fantastic response, like being able to then take the next 6 to 12 months to really make an effort to find great people you can surround yourself with who can help you to make really important decisions if you go through something similar. I found that the people who had more support made better decisions because they were able to get better feedback than those who felt like they had to go through it themselves. And that was probably the three things I would definitely make sure I would do.
Excellent. What should you absolutely not do?
One is panic. The startups or the founders or CEOs who panicked and either made big decisions very quickly without taking into context what could, the uncertainty part, who took the pandemic to mean that their business was terminal and they needed to fire a number of their employees or do things like that were hard to reverse. Definitely those who panicked struggled to be able to control their first initial behaviors. But second of all, probably the most important is, I think that sometimes business owners don't realize it's not as bad as what it looks like sometimes. And so, for example, I had a company who owed quite a substantial amount to the ATO, to the tax office, and they were getting to the point where not only was it affecting their business and how they were feeling professionally, but they were getting really really upset and very stressed about the fact that they owed several $100,000 to the ATO. But the ATO is actually really, I guess, for lack of a better word, kind through the COVID situation, and they had put together a whole heap of provisions to help directors and founders of companies to be able to go through that with a lot of support. And so this particular company that we helped went from being really distressed about the situation they found themselves in to a payment plan that they were able to push forward for a period of time, knowing that they were safe under the new provisions. So as a director, that they were okay to continue trading, and that they actually were able to find a new business model that allowed them to be able to make cash that they weren't expecting. So ultimately, the thing that they were most worried about, which was that the business was going to fail, that they were going to fail, and they were going to end up either bankrupt or having a whole heap of liabilities that they couldn't pay back. Like 6 months later, they're actually doing exceptionally well. And I think that had we not had the chance to speak to them and talk them through what their options were, that would have been a lot harder. And so I definitely think that if you're feeling like you're not sure what to do with the uncertainty, or that your situation is quite difficult and you're not quite sure what to do, don't keep that to yourself. Share that with people that you trust, because you might actually find that there's a lot more help than you realize to be able to get you through.
Awesome. Okay, so don't panic.
Mhm.
Anything else that you should not do?
Then I guess the big thing is like, I guess from a tactical point of view, try not to change your business model too drastically in a way that you can't change back without doing some testing first. So for example, with the winery that I was talking about earlier, like we did a little bit of, we spent 2 weeks testing an online business before we went full on to that business model, because it's hard to change that once you've committed. Probably most importantly is, I guess, from a business model point of view is it's really hard if you let go of all your employees to be able to then to have the energy and the capacity to be able to deliver outstanding results to your customers. So what we found is that the companies who tried to keep their employees on, or at the very least furloughed their time, or were honest with their employees and said, look, we can have a situation where we let 20% of you go, or we could all look at working 4 day weeks for a period of time to make sure that we all still keep our jobs and we all still have some income coming through, but we reduce our expenses and we all still keep delivering to the customers. Like those types of creative situations were super helpful. But then lastly, I think that the biggest thing that I would not do if I was going into a moment of uncertainty is to think that I was smart enough to do it by myself. And so whether that is your team, whether that's having advisors or so forth, I think it's really important to realize that as the founder, your job is to be able to bring the best out of people to give you the decisions to make for the company, rather than having to make them all for yourself. And so I'm mindful of the fact that along with panic, those who had additional support to make good decisions seem to do much better than those who made them alone.
Okay, excellent. Well, that's a nice segue into, are you available for people to connect with you if they see value in getting additional support from you guys?
Yes, definitely happy to chat. My role here at BDO is very much aligned to trying to be useful. So if you do have a question or a concern, or you're looking at either growing your business, whether it is a startup or a small business, or if you're having challenges with your business and there's a way that I might be able to give you some feedback that can help, definitely available.
Okay, and how should people reach out and connect with you? They can easily come through the Smart Hub and we'll do an introduction. Is that probably the best way forward?
Yep, they can definitely come through the Smart Hub, which is always great. You're all fantastic friends there, but also you can always hit me up at my email address, which is just my name, marc.orchard@bdo.com.au.
Perfect. We'll also post that email address in the link. Okay, Mr. Marc Orchard, we've come to almost the end of our Hub Live today. Do you have any final parting words?
Yeah, got you. So I'm mindful that I apologize that I didn't necessarily know all the different companies that are on the call, so I couldn't necessarily give you more specific examples. But I think that one of the things I just want to hat tip is that anyone who's running a business in 2020, I'm in awe of you and you deserve a medal, because realistically, it has been a ridiculous year in so many ways. But the thing that I'm really excited about is that, like, typically speaking, the best time to be in business is on the other side of a recession. And so Australia hasn't really had a recession for almost 3 decades now. And so even though the last 6 months have been really difficult, I'm anticipating that 2021 is going to be a really great year for small businesses and startups alike, particularly in a place like Australia, where we've done a really good job of being able to manage our way through the pandemic. And so if you're in a situation right now where you are a little bit over this year, but realistically 2021 is something that you're looking to focus on, I definitely think that if you get a lot of your planning done in November for 2021, and you reach out to the Smart Hub or myself or somebody to be able to give you a little bit of feedback on your growth plans, I think next year is going to be a really great year for a lot of companies. And so if there's anything we can do to help, just let us know. But I can promise you that I'm anticipating, as a non-betting man, that next year is going to be a much easier year for you to be able to grow your business than 2020 was.
That is brilliant. Mr. Marc Orchard from BDO, thank you so much for your time. We really appreciate the insight that you shared with us today. And yeah, this is the end of our Hub Live. If you have any questions, please still feel free to add them into the comments or private message us, and we'll be sure to connect you with Marc, or you can connect with him directly through his email address, which will be in the comments as well. Awesome. We appreciate you. We appreciate your time very much. And everyone who's following our Hub Lives, we look forward to seeing you next Thursday at 1. See you then.
Bye for now.